Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Dick long euro dollar short sterling Matthews with us from Pardus FX. How are you following these crazy central banks? How you doing, sir?
Oh, I don't know. What a wild couple of days, and then we go quiet Friday, haven't we? Nothing like non-farm. Oh, it is coming out tomorrow, isn't it? So it should be a lively afternoon tomorrow afternoon as well.
Yeah. So it's been something, but we're now past all. We're past it all. Let me hear what your thoughts are regarding the big three. So let's start with the FOMC. How do you feel about Jay Powell? I mean, he came out not swinging. He wasn't really fighting the looser financial conditions, were he?
No, which was interesting, wasn't it? He didn't mention he mentioned disinflation for the first time. He didn't really push back against the market, which I found a little bit surprising. But maybe just gotten to the point where whatever he says, the stock market's going to rally. People are going to do what they want to do. They're ignoring him. Looking at the States, it's unbelievable. The JOLTS figures, was it 1.9 jobs for every person looking in America at the moment for a job? Seems odd. Shrugged off the ADP figures as well because it was down to the snow. And as I say, non-farm tomorrow, 185, 190, something like that. So the economy still looks pretty good to me. Apart from house building, maybe is the difficult one. So he did surprise me not coming out swinging as I thought he might do. I thought he'd come out really fierce and try and scare the markets, but they kept the Freddy Krueger mask away. And then we had the ECB and the Bank of England. I don't know if you watched the ECB press conference. It just was absolutely.
I try to avoid it at all costs, but today I happen to have some things going on and I missed it. I just was trying to read the headlines as they were coming across, the squawks. But what are your thoughts there with the ECB?
Did as I expected. Came out hawkish, and then they had this really weird press conference when they're saying, "Oh, we're going to go by 50 basis points in March." Oh no, we're going to do by meeting, and
then
maybe not, and God knows.
But so the euro's down following the press conference, not as much as the sterling, which we'll go into here in a second. But is it because the market was looking for more than just another 50? Is that the problem?
I think if Lagarde's not a great communicator, and I've got every admiration for her. I mean, I think she's a doppelganger for Eric Clapton personally, but she comes out, she does her job. She said we're going to do 50, they do 50. If she just come out and said we've done 50, we're going to do another 50 in March, inflationary pressures are still there, the euro would have rallied, and I think that's what they're going to do. But she tried to soften it, and this really, really weird, and that brought the sellers in on the euro. The interesting thing is that we're getting near the top. Obviously, in this rate hiking cycle, certainly in the US, I'm not far off from the top in the UK and in Europe. But the Fed's going to have more scope to cut because they're higher than everyone else. And so I think you might start seeing people go, Fed's going to cut soon. Fed's going to cut soon. I personally don't think they will, but that will put continued pressure on the dollar.
So I believe that's the overarching consensus right now, is that everybody hears what Jay Powell has to say, right? They understand what he has to say. They understand that he says he's going to keep rates high, but we haven't seen the economy really weaken. So they're still calling the Fed's bluff, thinking, as we get into the second half of 2023 and the economy starts to weaken here in the US, the Fed's going to eventually they're going to flinch. Right. I mean, that's what the overarching theme is. And you think that's how it's going to play out?
No, I think that's what the market wants to happen. And I think the market's still going to carry on playing chicken. I actually don't think they're going to cut until first quarter next year.
Really? And why? Let me ask you this. We're in a different regime. You've been in the markets. When I was sucking my thumb, I think you were probably just starting off in the market somewhere around that time frame. You've seen a different market than myself and a lot of people that have been in the markets for 25, 30 years. What makes you believe that they're going to cut this time around, and why?
I think that we've entered a different cycle. You've had, the QE for years and years and years. You've basically had interest rates at zero, near enough to zero. I think COVID was a shock that none of us have ever seen. I think we're still adjusting to it, and I think it's brought about structural changes to the whole world. So the labour market and whatever, and I just think that we're in a higher, maybe not necessarily a higher inflation than we've gotten used to, a higher inflation level than we've got used to, but I think they're going to take this, keep interest rates higher for longer, and we're going to have to get used to interest rates at 3 or 4% for the foreseeable future. When I was a youngster, that was the norm. It's actually probably quite low. We used to go up 8, 10, 12, whatever, in the days of Volcker. So I think we're in a new regime of higher interest rates, higher base interest rates than we've got used to, and that's. I still think the stock market's wrong, but I just can't fathom what's going on. I just don't get it at all.
So let me ask you this. We haven't really discussed the Bank of England. So give me your thoughts with what's happening there, because you called it. Sterling weaker, euro's going to be stronger over the sterling. We got the euro sterling that's about 89 pence, maybe a little higher right now at the time of filming. Do you still like the euro sterling long, and how do you feel about the Bank of England here?
I do. I still like the long euro. Very, very unusual for me to say that. And short sterling. I'm very used to say short sterling. Unusual to say long euro. I think that the UK's probably got the biggest problems out of the three, out of Europe and the States. We're getting quite entrenched with inflation in this country. And whatever they say, shop prices came out last week, I think it's 16.9% up. And, people say, oh, well, inflation's going to drop. That means prices come back down. No, they don't. They just don't go up as quickly. And people, the government say, oh, we're going to halve inflation. Well, that's great. You're still double or 3 times the Bank of England's level. So what's the point to that? So I think that we have entrenched inflation in this country, and it's getting worse with the more wage demands. Virtually the whole country was on strike yesterday. I don't know if you see it in the press over there. We had the rails out, the teachers out, the border control, the nurses, 500,000 strikers, all wanting wage demands, which will feed inflation. So I think the Bank of England's got a big problem. I don't think it wants to raise interest rates anymore, and it's pretty much said that. And you're going to end up with high inflation, interest rates which they don't want to hike. Yeah, which to me just means you get a weak currency.
Okay, so you had a weak currency, continued euro sterling strength, at least near term. Yeah. Before I let you go, what's your best idea here? Because you got equities continuing to rally. Do you continue to buy dollars, or should you be looking elsewhere?
I fundamentally like the dollar, and I just have this awful feeling in the back of my mind, geopolitical risk, which we haven't even touched upon.
Right.
We're arming Ukraine. We're talking about sending prices to Ukraine. You've got China still keeping an eye on Taiwan. And there's been some odd explosions in Iran in the last few days in armaments. And I don't know who's behind that, whether it's just a coincidence or whether it's the Israelis. And I think there's a lot of geopolitical risk, which obviously you go to the dollar for as the currency for as a safe haven. Fundamentally, I actually still like the euro probably the most, but I wouldn't want to sell dollars and buy euros. I'd sell sterling and buy euros. I'd sell sterling and buy dollars. I think sterling is the weak one. That's the play.
Well, Dick, I tell you, I appreciate your guidance, and I know other folks here at the Traders Summit also do. So make sure you all are giving him a thumbs up and subscribing to the channel, because we do this once a week with Mr. Matthews, and I enjoy it, and I'm sure you all do too. So if you want to continue to hear these, subscribe to the channel. So, but in between our meetings, what's the best way to follow you?
You can follow me on LinkedIn at Pardus FX. I post a daily comment on there and a weekly comment. I actually did some Arab TV earlier this week, so if you speak Arabic, you can watch me speaking Arabic.
Wow, that's kind of cool. Very cool.
Or on Twitter, on the Pardus Twitter. So, or just give me a call.
Well, thank you, Mr. Matthews. We do appreciate your time, and I look forward to our next meeting next week.
Have a good week. Cheers now. Bye.
You do the same. Bye-bye. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.